Mike, do you agree with that, or do you have a different view where gold's going here in the near term?
I think it's going down a little bit more. I think we could even put in a double bottom before the next big bull market starts. I've been expecting a deflationary recession. All of the indicators that I look at say that we're either in a recession or really close to being in a recession. And this time when the markets go down, the baby boomers don't have a decade or two to recover. They're out of time. And they're going to get scared, and they're going to stop their spending and just start paying down debt and saving everything.
But can $1 trillion of stimulus reflate the economy out of deflation, but not create a hyperinflation, so we could be in a situation where things are, we know they're bad, but what's 5% more in debt? And you know what? Not the environment that things are just kicking the can down the road, and gold doesn't run.
The stimulus they did last time was to take the rates from 5% down to zero, basically, and to create $3.2 trillion and put that on top of the $0.8 trillion that was base currency before they inflated it. So they added 400%. It isn't going to be $1 trillion. It's going to be the same percentage move. They're going to have to increase the currency supply by 400%. This is what I said last year, to get the same effect.
Yep.
They've already, it's now this size. They're going to have to do the same percentage of stimulus that they did last time to get the same effect, and that requires that's like $12 trillion bucks.
But when you get a guy like Carl Icahn,
Stanley
Stanley Druckenmiller, all these guys saying, hey, the reasons to hold gold no longer appear to make sense to me anymore, and Fairfax Financial, the Canadian Warren Buffett, basically removed all his hedges off the U.S. market, thinking there's lots of upside. Mm-hmm. Could this be setting up as we're all wrong here, that gold isn't going to go higher, or or the fund managers doing what they need to do?
It could go higher in the short term, but I don't look at anything in the short term because I'm usually wrong when I do, and so I just look at the real long term. And long term, we're in the fourth longest economic expansion in U.S. history. In just a couple of months here, it's going to become the third. 9 months later, it'll be the second, and 9 months after that, it becomes the longest economic expansion. This is the weakest economic expansion that we have ever had in terms of increase in GDP during this period that isn't a recession. And to me, that means, especially with all the manipulation they did, there's a lot of stored up energy. And when this recession comes, it's going to be bad. There's going to be a backlash from all of the manipulation that Ben Bernanke and Janet Yellen did. And when that happens, I expect gold to go along for gold and silver to go along for the ride at first, and then just do exactly what they did in 2008 and turn around early and explode to the upside, with the rest of the markets continuing to crash, even if it's deflationary, because gold and silver are the other safe haven assets. And of course, we all say that the only asset that doesn't have counterparty risk, so it's no one else's liability. People are going to be rushing to that. We're also in the middle of a bond bubble. This next recession is bonds will get a short-term kick at first because it's going to be a global event. And there will be investors from the rest of the world rushing toward U.S. Treasuries, where they've been taught to run as a safe haven, and we're one of the few that isn't paying negative interest rates right now. So they'll rush toward U.S. bonds. They'll get a pop, but ultimately the bond bubble is going to be popping too, and that is really, it's sort of an Armageddon scenario.
But don't you think? But we can bring in imaginary variables. We've seen negative interest rates. There's ways that they can kick the bond bubble down, and that's a much bigger issue than anything else.
Right.
With the derivatives market and all that, we're looking at a quadrillion dollars of exposure that would crumble the financial system. Do you really see an Armageddon situation, a financial Armageddon?
I think that the next recession is going to be really bad, and I don't think that there's any way that they can put it off. I mean, it may happen in 3 months, it may happen in a year and a half. Okay. But there is a recession right around the corner. You don't have permanent economic expansions. They just don't happen. And I don't think that with all the stuff that's happening in the world and with the somewhat weak U.S. economy, I just don't see this turning into the longest economic expansion in
Okay.
U.S. history, and we're close to that now.